Welcome to TheoTrade. This is Don Kaufman. June 27th, 2025. 25 minutes stand between us and the cash close on this Friday afternoon. The S&P's up a whopping 7 handles. You know, in my book, well, that is massively unchanged. But I got to tell you, decent size reversal in today's trading session. I mean, come on. Look, that's the first time that we have seen two-sided trade in a long time. By the way, for those of you, it's been long enough, I probably have to mention this. Two-sided trade means markets that go up and down. But let's just drop it right on you right now. Look, in this weekend's update, we're going to talk about why traders should sweat some of these all-time highs in the marketplace. And more importantly, I'm going to discuss how you can actually trade into the all-time highs. For those of you want to take advantage of positions, I'm going to show you exactly how to take advantage of positions via some of the trades that I've actually taken in the last couple of trading sessions. So let's start to kind of break it down here again in this TheoTrade weekend update. The first and probably most important aspect in the weekend update here is, yeah, we broke out of the volatility box that we have been in for a significant period of time. Allow me to display precisely what that looks like. First thing I like to do is drop the chart in the S&P futures from a 1-day to a 30-day 1 hour. I'm going to go ahead and close up kind of that left side bar, just to show you how substantial this is. Now, for those of you kind of the uninitiated, you look at this, you're like, oh no, man, this has kind of been trend up a little bit, but it hasn't. Allow me to adjust this futures contract, for contract changes. Effectively, that's the role. What you'll actually find is that dating back all the way to relatively early May, we have been in an incredibly tight range in this marketplace. And I'm even kind of tightening it up right now. It's about 150 point range we've been inside of this marketplace. And again, I'm all the way back to fairly early May kind of time frame over here. And all we've been doing is just kind of pinging back and forth inside of this range. Well, that changed this week. We broke the upside of the volatility box. And as I've said time and time again, the reason for the fierce break to the upside, look, a lot of people are going to be like, well, it was the news, it was this, and there's no more war and some of the trade wars are going well. Look, you got to push all of that garbage and noise aside. If you want to be effective in this marketplace, look, at what's going on inside of this tape. So we smash to the upside of the volatility box. The reason you smash outside of it is we haven't moved, again, since the beginning of basically May. You got most of May, you got June, in here. For the most part, you're 6 weeks of, just going in here and accumulating more and more and more open interest, in options inside the exact same range. So what happens in this case is when you break out of it, there is this tremendous amount, this ball of risk is just massive. It's a tremendous amount of risk, and you have to hedge it. So all of a sudden we explode to the upside. And as I said, kind of midway through the week, this right here, this is where I sweat a little bit. And again, I'm telling you, traders, you should kind of sweat this because we've seen this time and again. You smash to the upside and there's just this huge amount of risk. And again, the reason that we smash to the upside is all of this risk. When I'm saying all of this risk, all of this open interest in options like the SPX, and really every single product has been kind of range bound, very similar to this. But all of this risk, as we break to the upside, has to be mitigated. Meaning that, as we trade higher, trading firms have to buy into that, and we end up with this fierce kind of move to the upside. Now, I'm going to counter and say we've seen plenty of these volatility boxes, descend to the downside. What we've also seen in these volatility boxes is this immense break to the upside and then these precipitous drops. I'm not saying that's the case, okay? The behavior right now, though, it's dangerous, and it just started getting dangerous as the marketplace kind of got like fever pitch, if you will. And then today, the marketplace reversed to some degree. Look, the marketplace reversed today on some news, which I'm going to discuss here in just a few minutes. And the reversal is not major. I mean, look, the S&Ps are still up 12 handles, 20 minutes left inside of the trading session. Like, it is what it is, okay? But we're seeing some two-sided trade. And the other aspect that really resonates with me is that throughout the course of today's trading session, okay, even with the marketplace higher, the volatility futures started climbing this morning. It was like the volatility could see that things were getting a little, again, kind of fever pitch. It's highly unusual to see markets up big. Like, and again, I want to point this out because it really is important. The volatility was creeping up. This over here is an announcement. Don't worry about that. The volatility, though, was creeping higher when the S&Ps, let me show you the S&Ps. The S&Ps were exploding higher. So you have volatility going up with the marketplace going up. But if you're not comfortable with volatility futures contracts, you could always look at VIX, okay? And the VIX as well. Here's the cash open, and the VIX was going up, okay? With markets accelerating to the upside. That's just not a warm and fuzzy feeling. And I see that and I'm like, look, that's why I'm telling you, traders, should sweat that a little bit. The coming days are still fairly critical because we have seen in the past, as I said, markets kind of descend down upon themselves. This marketplace, okay, is clear to continue to propagate new highs so long as it doesn't pull back, okay, in and around that 6,100 level. You get back there, okay, and the market can start to implode upon itself. So you're in the clear right now, and you're in the clear by a fairly wide margin. As long as we don't drop 100 S&P handles, okay, good. You're going to remain higher, okay, for the time being. Now, with that being said, again, we're out of the volatility box. We moved in a pretty fierce nature out of that volatility box, which is to be expected. Next thing on the docket, volatility, when you start looking at VIX, okay, collapsed this week. And then I turn around and say, long live volatility. This is not a half bad time, okay, to consider some long volatility positioning. And that means, look, I'm not trying to tell you that I see the future, okay? Oh, volatility is going to come back. That's not my intent. My intent is to tell you, okay, that it appears that volatility, okay, is lying dead on the floor, meaning that this volatility all the way down here at 16.5, okay, the VIX itself is probably not going to go much lower. But if we look at the volatility futures, which tells us like what the future of the VIX is going to be, the future of the VIX, like 54 days out, is already pricing back to 20. So I know that everybody looks at VIX and they go, oh, the VIX is so low. It's at, 1650. I should buy it. But if you are buying VIX, okay, and you're using, options that are 50 some odd days out, you're really not buying a 16 VIX. The VIX options are based on the volatility futures, okay, and you're really trading more like, well, in this case, the VIX is at 20. It's a little bit over that, but neither here nor there. I want you to be aware of that. I will look next week, okay? So holiday trading week next week, I will look to position myself into long volatility positions. And that's what I mean. Vol collapsed, long live volatility means I want to get long a little bit of volatility in this case. All right, pushing that aside. Well, let's talk a little bit about tariffs because that's going to be on the menu, all right, a bit. It sounds like, a Chinese deal, maybe, possibly, could be already in place, okay? They talked about having signed off on a framework like, 2 days ago. Okay, maybe that's really the reason for the rally. Somebody may have known something. Nevertheless, okay, there's no taco talk on trade with Canada. The administration broke off all, okay, trade discussions and tariff discussions with Canada. That just happened, and that was actually this precipitous drop in the marketplace. And then the marketplace turned around and realized, it's all right, it's Canada, and got a little bit of a bid back up under it. Okay, all right, listen, I can't let that one go. But so the real reason I put this in here is trade discussions and trade negotiations are once again, okay, they're going to kind of take center stage. So you're going to hear about this a little bit next week, but the next couple of weeks, because trade deadlines are coming. It's July 9th is the deadline. And quite frankly, there's just not that many trading days between us and those deadlines. So the point of me bringing this up, though, okay, and I believe that the reason the market really reacted, it didn't have much to do with Canada. It had to do with taco, which basically means Trump always chickens out. Okay. At this point, I think that the assumption is moving forward, there's not going to be any chickening out. There's not going to be any more, like, literally broke off trade talks with Canada entirely. Okay. I guess we're going to do without them for the time being. Nevertheless, there are going to be issues coming up that are tariff and trade talk related. This is going to get a little hostile. Okay, it's going to be a big portion of some of the risks, and that's why I kind of say, like, yeah, maybe you should sweat some of these all-time highs. Doesn't mean the market has to pull back on it, but we're going to have some scary times ahead. Now, I want to kind of continue on. The driver of the markets, okay, this week, well, it's clearly not like the energy sector. Clearly not the energy sector. If you bring up auto expected moves, energy got decimated throughout the course of this week, and rightfully so. Some of the geopolitical risk obviously abated. The financials broke to the upside of the expected move, but let's just be very frank, and you're not going to convince me that the financials are going to drive everything. The financials, however, are right up against all-time highs. That is the XLF. That unto itself could be an interesting trade. Okay, but the primary drivers of this marketplace once again became tech. And it's not exactly where you may have thought. Microsoft, if I bring up auto expected moves, okay, look at Microsoft shattering the expected move literally on Monday and Tuesday of this week. Microsoft is one of the preeminent stocks. Okay, clearly NVIDIA, okay, critical role, shattering its expected move. Next in the docket, Meta. Meta looks real similar to Microsoft, shattering the expected move. Okay, Meta, okay, ultimately coming right up, okay, at or near its highs. I do want to zoom out for just a second to a 5-year to show you how significant this is. Okay, Meta could also be an incredibly good candidate, right, of how to trade something into all-time highs. I'm going to come back to that in a moment. Last but not least, okay, Amazon. Amazon is not, okay, at its all-time high, but definitely participated in the latter portion of the week. Now, of course, you're going to ask me, what happened to Apple? Apple's out of the contest, people. Can't get out of its own way. What happened to Google? Google, although lifted off, okay, Google is still a very far cry away from its highs. Okay, and then of course people are going to point out Tesla. Slow down there, cowboy. Tesla is massively unchanged on the week. So don't get ahead of yourself with what's the drivers are. I'm telling you, it's Microsoft, NVIDIA, Meta, and Amazon to a lesser degree. 3 underlyings, okay, are driving this marketplace. But with all due respect, and I said, it's not financials, it's not this. Has anyone here looked at the market cap of NVIDIA lately? Like, are people paying attention here? Because you're closing in on a $4 trillion underlying. Okay, all of the financials added up don't equal that. You look at Microsoft, it's 3.7 trillion. Okay, Apple, it's fallen off. It's a $3 trillion company. I know, what's 3 trillion amongst friends? And now we actually have Meta closing in on almost a $2 trillion market cap. But the behemoth, that is NVIDIA, okay, is really the driver behind this marketplace. So again, I know that there's all these tactical discussions going on. It's the financials, it's okay. That's all for nothing. It's a bunch of crap, and it literally is a bunch of crap. I don't care what sectors are strong. We have a trade, okay, in a product that is almost $4 trillion of market cap. Okay, ain't nothing going to stand in its way. This thing is a wrecking ball right now to the upside. Okay, and I say that because then, well, you have a marketplace that relies literally on one or two underlyings, and we've seen some of the drawbacks inside of NVIDIA, okay, really inflict huge damage to the S&Ps. It's another reason why I'm telling you, kind of got to sweat a marketplace. Now, you're going to look at the advanced decline line and say, oh, the internals are what? The internals have not been that good this week. Don't give me that, because they're not that good. I mean, the energy sector is getting killed out there. There's not that great of internals this week. What you have, okay, is a marketplace that's predominantly being driven by three stocks. We're back to this, right? Now, deviate again. Rather than sweat the all-time highs, okay, trade them. How am I going to trade them? You know, I'll just give you a quick example. I had a position on Uber, okay? Uber coming right up to all-time highs. Okay. By the way, I exited my Uber position yesterday, but Uber coming right up to all-time highs in here. Okay, got bullish, broke to the upside. Literally, I got bullish right in here, which was a Wednesday. Trade actually closed out on Thursday. Here we are on Friday with a little bit of a pullback. Uber could still be a candidate in here. Onward. How did I actually trade it? Used a spread. Okay, I used a spread, and this one's not like crazy like upside in here. I used a spread. Bought the spread for basically a $1.70, closed it for 221, 223, 221 in there. So nice trade. Another one that I've actually put on the other day was inside of Cisco. Cisco is a little bit further back in time. I was back right here, okay, in more mid-June timeframe, looking for it to smash through all-time highs. We hit that one, okay. Another one I've actually got on right now. This one is not closed. This one is absolutely open. It's Taiwan Semiconductor. Taiwan Semiconductor, okay? This thing's actually smashing to new highs. I've actually got that spread on in here right now. Spread's actually in the money. We're up very, very nicely. Really, really close to actually closing that trade for a profit. And I'll tell you what, off the cuff, I'll throw another one up there, okay? I'll actually look at Meta, okay? And Meta's an opportunity that I might be able to take advantage of even into Monday. Nice spread trade, looking for it to actually smash through, okay, that 740 region. It's going to break into all-time highs. I'm well aware that earnings are coming up. I'll have to trade the spread a little bit more shallow in terms of time. But look, people, at a point in time like this, okay, be smart in how you actually execute. Use spreads to mitigate risk, because if the marketplace turns around and implodes upon itself, okay, you don't want to get caught in that crossfire. Sweat the all-time high, okay, not because you see anything that's like imminent risks. I'm aware that skew is high. I'm aware that volatility is low, okay? But as long as we're outside that volatility box, we're in good shape. Last but not least, let's actually come to the SPX. So as I said, volatility kind of crushed down this week, but the move in here is still fierce, okay? We are expecting a $116 move this week. Yeah, you got that and then some. Look, we were expecting to come up, let's get grandiose, even to 6,100. We're well past that. Okay, you're not quite double the expected move, but pretty damn close to it. So keep your hands and feet inside of the vehicle. This was a really substantial, like smash right through the upper edge of the expected move. And next week, you're going to see big volatility crush next week, right? But literally, you only have 3.5 trading sessions. For those of you that are not aware, Thursday of next week is a half a trading session. Friday, which is July 4th, the markets are closed. So Thursday, okay, which is July 3rd, well, you look out there, it's about a $74 expected move, okay, which is still, it's decent. There's still going to be some movement next week, but overall, the volatilities, okay, are going to be crushed down next week with the anticipation that a lot of traders are going to be on vacation and so forth. Look, bottom line is algorithms, they don't take vacation. Okay, they don't need vacation. Nevertheless, okay, that volatility should subside to some degree into next week. Meanwhile, you look a little further out and it's going to pick up again. And that is important. So huge smash to the upside of the expected move. Look, okay, as we coming into the cash close, markets, okay, rebound a little bit. Look, when we started this, we started actually recording this, the S&Ps were up, what, 7, 8 handles. We were massively unchanged. Now, okay, a little bit of a rally back over here. But again, some interesting times ahead. We might be at or near all-time highs, okay, but sweat them. Trade them smart, okay? Use spreads where possible, and do not stick your neck out and take tremendous risk. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.